going on, everyone? Welcome back to another video. In this one, I'm going to be talking about a simple process of using weekly profiles to get your daily bias. Just to mention, I will be sharing everything you need to know on weekly profiles in this video, but if you want a really detailed explanation, you can go down below and click the linked PDF in the description, and that's going to go even farther in depth on this topic. With that being said, we can start by answering the question of what is a weekly profile and how does it translate on an actual chart. The basis of this concept is framed around the understanding of the open low high close and open high low close of the weekly candle. On the left, we have a single bullish weekly candle, which is open low high close. And on the right, we have a single bearish weekly candle, which is open high low close. When you break the single weekly candle down into a daily chart, these 5 daily candles are what we consider a weekly profile. Using this understanding of how the weekly candle prints on a chart and the 3 profiles I'm going to be showing you in the next part of this video, we're able to get really efficient daily bias. Just as a quick disclaimer, yes, ICT has given 6 types of weekly profiles, which you can find in the core content videos, but I've refined my system down to only 3 profiles, which I consider high probability, so that's what I'll be sharing with you here. The first weekly profile to understand is the classic expansion week. This is when Monday or Tuesday form the reversal and price expands in the opposing direction into Thursday. On the left here, we can see a bullish classic expansion week with the clear open, low, high, and close of the weekly candle as previously mentioned. Here on the daily chart, either Monday or Tuesday form a low of the week at a 4-hour or above discount PD array, and price expands off that point through Thursday into the weekly objective. Same idea here on the right, but this is a bearish classic expansion week with the open, high, low, and close of the weekly candle. On the daily chart, we expect Monday or Tuesday to trade higher into a 4-hour premium array to form a high of the week and expand to the downside off that reversal through Thursday into the weekly objective. From the point of reversal, this profile offers bias for Tuesday, Wednesday, and Thursday's trading. As for Friday, using the understanding of the TGIF setup, we do not anticipate a continuation of the weekly range on this day. I have a video going over the function of the TGIF setup if you are not already familiar with it, and I will also have that video linked down below. The next profile we're going to cover is the midweek reversal. This is when Wednesday forms a reversal and price expands away from that point for the remainder of the week. On the left here is an example of a bullish midweek reversal. The weekly candle is an open, low, high, and close with the anticipation that the closing price will be near or at the high of the week. Looking at a daily chart, Monday or Tuesday can either be consolidated or offer 2 down close candles away from the weekly draw, which can be considered a Judas swing. On Wednesday, price makes a move down into a 4-hour or above discount array and expands off that price point into the weekly objective. Same idea here on the right, but this is showing a bearish midweek reversal. The weekly candle is an open, high, low, and close with again the anticipation that price will close near or at the low of the week. Here on a daily chart, Monday or Tuesday will either be 2 up close candles considering a Judas swing, or will be relatively consolidated near the opening price. On Wednesday, price will trade up into a 4-hour or above premium array and expand off that price point to the downside into the weekly objective. Under the midweek reversal profile, we have established daily bias for both Thursday and Friday, where we anticipate a continuation of the weekly range away from the reversal point in the form of expansion. The third and final weekly profile is the consolidation reversal. This is when price reverses on a Thursday and expands in the opposing direction through Friday. On the left here is an example of a bullish consolidation reversal. The weekly candle is an open, low, high, and close, and just like the midweek reversal, we are anticipating the closing price to be near or at the high of the week. Looking on the daily chart, Monday through Wednesday will be consolidated around the opening price of the week. On Thursday, price manipulates the external low of the consolidated range and expands off that price point through Friday into the weekly objective. And again on the right, we are seeing a bearish consolidation reversal. The weekly candle is an open, high, low close, with the closing price being near or at the low of the week. Moving to a daily chart again, Monday through Wednesday will be consolidated near the opening price in the internal range. Thursday, price manipulates the external high of the consolidated range and then expands away towards the weekly draw through Friday. This profile offers clear bias for Friday's trading, where the main target will be the opposing side of the consolidated range. Now that you understand the basics of the 3 weekly profiles and how they offer daily bias for specific days, we can go over the actual protocol that you can follow each week to apply this in a market that's trading live. The first step of the protocol, and one of the most important, is to avoid trading on Mondays. Under the 3 profiles I previously mentioned, Monday is never an expansion day. It is only ever a Judas swing, a consolidation, or a reversal. Number 2, significant high impact news never falls on a Monday. With the understanding that Monday will always fall before a high impact news event in the week, we can anticipate high resistance price action, which we're going to want to avoid. The third and final reason, if you were to attempt to trade Monday when relying on a weekly profile framework, you have no data for the week to determine what the profile is likely going to be. The only profile which Monday sometimes plays a significance in is a classic expansion week if Monday happens to trade into a higher time frame PD array to reverse price. Considering each of those factors, it's highly in your favor to avoid this day of trading and simply keep your charts closed. The next step of the weekly protocol is to take advantage of the economic calendar. If you search forexfactory.com/calendar, this is the page you'll be taken to. This is where you can find the news events which are taking place throughout the week across all asset classes. Our first step here is to filter out the noise of all the unnecessary news events, as all we're concerned about are the significant high impact news events which are taking place during the week. If we press filter in the top right, we get this drop down of all these options. Under expected impact, we want to remove the orange, yellow, and gray folder. We can keep each event type. And under currencies, you're going to want to select the one which is correlated with the pair you are trading. I'm using indices as an example, so I will select USD. Once I click apply filter, you can now see that our list only contains red folder USD news. Now that your economic calendar is properly filtered, we can go into the question of how do you actually use this to your advantage. The main rule under this framework is to avoid trading the days before the first significant high impact news driver of the week. While each of these events show red folders, they are each weighed differently in their amount of significance. The one rule of thumb to follow to know which news events are significant on the market is to note either FOMC press conference or any red folder news event that is released at 8:30. Using that rule on this current week, we would consider this FOMC press conference at 2:30 on Wednesday as the first significant high impact news driver of the week. That would mean regardless of the price chart, we would be avoiding trading Monday and Tuesday. Another example here shows the first significant high impact news driver on 8:30 on Monday, but if we recall, the first rule is that we don't trade Monday, so we look to Tuesday as the first day of the week, and that has an 8:30 high impact news driver, so we consider Tuesday as the first day of potential trading. Moving on to another example, it's clear to see here that there is no significant high impact news until CPI, which is 8:30 on Thursday. That would mean we consider Monday, Tuesday, and Wednesday as low probability conditions, and we would not be seeking trades until Thursday. The logic of the economic calendar is that the days prior to a high impact news event of the week, it is likely to be consolidated or accumulated. The high impact news event is when volatility is released into the market, and the following days can be expansive. While this may seem like a conservative approach to the market, it's a sacrifice being made to ensure that you're trading in high probability conditions that are likely to offer expansion instead of being caught up in pre-release accumulation. With the first 2 steps of the weekly protocol covered, we can move to a price chart and continue on with a real example. Here on the chart, this vertical line is noting the week open. Rule number 1, as already mentioned, is avoiding Monday's trading. Now that Monday is traded, the next step is to look at the economic calendar to see which day has the first high impact news release. On the screen now, you can see that 8:30 unemployment claims on Thursday is the first significant news driver of the week. That means that we will continue to avoid price through Wednesday. Now that Monday through Wednesday has traded, we now have the advantage to use those 3 days as data for the weekly profile and makes it easier to predict the following days. This now takes us into the third step of the weekly protocol, which is defining the higher time frame PD arrays, 4-hour and above, for price to reverse from, and the opposing weekly objective. Here on a 4-hour chart, using a really simple 50% fib anchoring from low to high of the dealing range, we can see prices retracing into a discount fair value gap. On the opposing end, you can see we have relative equal highs, which is acting as a draw and can be used as the weekly objective. This simple framework here is good enough to anticipate a move to the upside on our weekly objective, considering it is in line with one of our 3 weekly profiles, which would be a midweek reversal. The fourth and final element of this weekly protocol is to observe a change in state of delivery to confirm the weekly reversal. On the left, we have a graph showing a bullish change in state of delivery. The 3 parts to defining a change in state of delivery are time, price, and a close through opposing closed candles. On the left here, we have an example of a bullish change in state of delivery. The element of time is the day of week we are anticipating a low being formed within a defined weekly profile. Price is pairing the day of the week with a 4-hour or above discount PD array. Lastly, we look for price to close above the down close candle or candles which engage the higher time frame discount array. So this candle here would depict a change in state of delivery. Same idea here, but for a bearish change in state of delivery. Time is the day of week we are anticipating a reversal under a defined weekly profile. Price is the 4-hour or above premium PD array that price is engaging. And finally, we have a close below the up close candle or candles that ran into the premium array. This outlines the moment that higher time frame order flow is shifting within the week and is used as a confirmation for reversals. Now moving back to our previous chart example, ideally we want to be looking for a change in state of delivery on the hourly chart, but this is a good example when the hourly chart isn't as clear. We can move down to the 30-minute to get a more refined view on price. On a 30-minute chart, it's much easier now to see the consecutive down close candles which engage our higher time frame discount array. Remembering the previous criteria of a change in state of delivery, we have time, which is price reversing on a Wednesday, which falls under a midweek reversal. We are pairing time with price on this reversal with a 4-hour discount fair value gap. And here on this candle, we have a close above the consecutive down close candles. With each part of our weekly protocol being met, we now have daily bias for Thursday and Friday and can anticipate an upside expansion on both days. To cover one more example using this weekly protocol, we'll move on to the following week. Again, step number 1 is avoiding Monday's trading. Now that Monday is printed, we want to go to the economic calendar and note the first significant high impact news driver of the week. With the pop-up on the screen, again you can see that Thursday 8:30 unemployment claims is the first significant high impact news driver of the week, so that means that we will be sitting out Monday through Wednesday. Using Monday through Wednesday price action as data to identify the current weekly profile, it's clear to see that the market is in a consolidation, so what we want to do is mark out the external high and the external low of that range. Now we wait for time and price to line up to see if the market will engage either side of the external range on a Thursday, which will confirm a consolidation reversal profile. Observing Thursday's price action, we can confirm a consolidation reversal profile and now have daily bias for Friday's trading, anticipating a continuation of upside expansion. Time is the reversal taking place on a Thursday. Price is the engagement of the external consolidation low. And here we have a close above the consecutive down close candles which ran into the low, which is a bullish change in state of delivery. As anticipated under the consolidation reversal profile, price expands higher on Friday through the opposing end of the consolidation range. Link down below, you can find a 9-minute live walkthrough of my executions on this trade. To do a quick recap of what I've covered in this video, the 4 weekly protocol steps are: number 1, avoid Monday's trading; number 2, no trading days prior to the first significant high impact news release of the week; number 3, define 4-hour and above PD arrays to frame a reversal within a defined weekly profile; and number 4, observe a change in state of delivery, ideally on the hourly chart. The beauty of this way of operating is that you don't have to be a master analyst on these charts. You simply need to follow a system, and that's what I've given you here. This is baseline for weekly profiles and should be simple enough for anyone to apply if they wish. That's all I have for you in this video. I hope you enjoyed, and I will see you in the next one.